Welcome, everyone. My name is Chris Fong. I started the ex-Google community Xoogler back in 2015 after spending 8 years at Google. I'm so glad all of you are able to join us live here today, watching this recording later to hear from 11 startup founders from all over the world. And let me talk to you about what's going to be happening here. First of all, I'll do a short welcome. Then in 5 minutes, you hear the startup presentations. From there, each presentation will be for 2 minutes. And we have a panelist of investors who will ask 2-minute questions. You also get some descriptions of this platform and how to use it shortly via a presentation by John from Stonks. So who are Xooglers? Well, when I joined Google back in 2006, I was known as a new Googler. We shortened that to Noogler. Well, you're at Google, you're called a Googler. And so when people leave Google, people are called ex-Googlers, shortened to Xooglers. So really, the Xoogler community are people who have worked at Google before. And in fact, some people join the community before they're about to leave to really get some tips, some background, and meet some awesome people. We now have 13,000 members. We organize 300 events globally. This is just one of them. It's all volunteer run. There's probably an event near you happening next couple of days as well. We have an AngelList syndicate with over 2,500 investors. And from there, back in 2020, a few of the investors, as well as our startups, asked us to create a fund. So we have Fund 1 and now Fund 2 to also invest in ex-Google founders. So why are we all here? Well, we're here to really meet some awesome founders, but hopefully if you're here as an investor, you probably want to invest in one of these startups earlier on, and maybe some of you have already done so, from Chinese companies like Pinduoduo, as well as Xiaomi, to consumer companies like Twitter, Instagram. They're all founded by ex-Google founders. Even Pinterest, OpenSea, and FalconX are examples of the crypto founders from more of the recent vintage. Ex-Googlers essentially are people who have left Google to start their own companies, and from history, you see a lot of successful founders have made it, and quite a few of these you're going to meet today will probably make it as well. So hopefully all of you are able to invest in some of the future samples we're going to be showing up in future demo days. So let me bring you back to the first demo day we had in 2016. This is at Google's headquarters. Mark Cummins, he's an Irish founder. He had sold his first company to Google, what became Google Lens, and he participated in this, and I met him there. Pointy was a company that we were able to invest in a couple of times, and he sold this company to Google. And so we have him to thank of why we keep doing these demo days, because we know a lot of founders want to present to investors. And all of you, thank you for coming and joining us today. You want to invest in these startups as well. So we wouldn't be able to do it for all of you. What's really interesting as well is we've been able to do these demo days online since the pandemic, but we did these in person from San Francisco, which is one example back in 2018, to the bottom left in Bangalore, to the bottom right in France. We've done this all over the world, as well as now online. What I've circled over here, this is the crypto demo day. This is the third one we've done. But in 2018, the founder of Solana actually presented. This is Anatoly. I've circled over there, and Alan Yu. So what we have now is the ability for us to help these founders open up the doors for you to meet them via the organization committee, with a syndicate, with the ventures. The syndicate actually invested in FalconX, Workstream, and also had opportunity to invest in OpenSea via the fund. And we really do that via events that we put together. For the crypto investors here, you know of Harmony. Stephen was a longtime Xoogler member, was able to find his co-founders through events he organized in Sunnyvale. Devin and Alex, back in 2018, 2019, did a lot of events with the community before people knew about OpenSea. And we do it via this monthly newsletter that all of you can also be a part of and check it out. So feel free to check out this newsletter. It's just on Substack. You can search for Xoogler and check out what other events there are. What we've been able to do as well is have the Xoogler community help others. So it's not just for ex-Google founders, even though we focus on helping people who have been at Google and are launching the companies. During the pandemic, we had an intern who had his internship rescinded. We brought him on. And the fall, because he wasn't able to go back to school to participate in a sports league, we started Xoogler School. It was a tough time. I'm sure any of you who had people who were in college, whether it's your own kids or friends who had kids, it's a pretty tough time for all of them. So we created Xoogler School and got over 250 ex-Googlers to mentor them as gap year college students. Knowing the economic times, we actually just decided to set up the next cohort this September. And we're actually having a few people who are ex-Googlers also help folks get to know more about algorithms and data structures, where when the economy picks up, they'll actually be more trained up to perhaps apply for Google and all the other tech startups. So if you want to hear more about this, email us at learn@xoogler.co, or perhaps nominate someone who may need some assistance to get a job. I wouldn't be here by myself if not for this entire team behind me. Ankit Kushagra from the Xoogler team, as well as Courtney from Stongs. You get to see John, who's a co-founder of Stongs, but really thank you, Courtney, for doing all the great legwork behind to prepare all the startup founders here. We wouldn't be here without all of you and all the organizations that all of you have been able to do to help us bring all the startups here today. So in summary, it's 11 blockchain startup companies, all had a ex-Google founder. They're doing 2-minute pitches. It's 2-minute Q&A with our panel and a live chat. And who do we have? We have very well-esteemed panelists. Mary Grove, she was at Google right before even the IPO, preparing Google for the IPO. She started Google for Entrepreneurs, the predecessor for Google Startups. And she's now a general partner at Bread and Butter Ventures. She's one of our panelists. Prabhakar Reddy, had a chance to meet him via his Xoogler co-founder, FalconX. And before he even started FalconX, he was a VC at Excel, and now he's a private investor as well. So great to have him here. And also David Thacker. Back in 2009, when I was looking into the VC space, I had a good opportunity to meet him. And over time, David's been a great supporter of the Xoogler community, but also Xoogler startup founders. And all of them will be asking questions of the startups that are presenting here today. Perhaps, John, let's bring them up. And over to John, who will be our MC for today. I'll be lurking in the background, or send us an email, demo@xoogler.co, if you have any questions from this presentation. Over to you, John.
Awesome. Thank you so much, Chris. So panelists, thank you so much for doing this. I'm just going to give you guys a quick update on what we're doing here tonight. So just like Chris said, we're going to do a 2-minute pitch. And the founders know that when your faces reappear on screen, that is the buzzer, so to speak, and that means that their time is up. But before we can get started, if you'd like, you can have the Stonks live stream open on another tab. I dropped a link in the private chat here. But we need to do something that is a little bit of a practice, a little bit of a tradition here on Stonks. We have a fake startup called Goober, and people who have been here before know Goober very, very well. It'll appear at the bottom of your screen. And if everyone could please just practice stonking. I need to find a new word for it. That's such a dumb word. I'm so sorry. But go ahead and click the button that says Get Intro, and go ahead and request an intro to Goober. So we need to try to usually get the total investment interest in Goober to about 10 million if it's a good crowd. So typically we will go ahead and practice on that one, and we're going to be good. If somebody's running the stage, if they could put Goober on stage so that everybody can practice, that'd be great. I see. Oh, there we go. I see some intros rolling in. Perfect. Panelists, you probably won't see this unless you have Stonks open in another tab, but people are now requesting an intro to this fake startup. It's funny. It's something that we do every time. But so everybody's practicing fantastic. I'm going to say goodbye to you guys for now, and we'll see you guys back in just a few minutes after the first pitch. Okay, cool. So it looks like Goober got just over 10 million. So just what we wanted. Perfect. All right, let's take that away. Perfect. And we're going to get this thing started. So our very first founder today is Victoria. Victoria is going to come up and tell us about Little Atlas. Victoria, how you doing?
Hi, John. Yeah, I'm good. How are you?
Fantastic. What time of day is it where you are?
I'm actually in London right now, so it's 1 a.m.
Wow.
It's nice and early.
Fantastic. Okay. Let's take a look at the slide. Fantastic. So what I'll do is I'll disappear. I'll start a 2-minute timer.
Okay,
and
perfect.
You have the floor. Take it away.
Great. Hi, I'm Victoria, co-founder and CTO of Little Atlas, and Xoogler as of almost 3 months. I want to remind you all of something. Social media started with a goal of creating true connections. However, as it grew, there was a shift. Social media apps stopped focusing on fostering genuine connections and instead focused on influencer content. All the big social media apps today, like TikTok, YouTube, Instagram, primarily focus on influencer content. This is a big problem because in an ever-connected world, people are lonely, and their loneliness correlates with social media usage. At Little Atlas, we want to create a new paradigm for social, one that focuses on fostering true, genuine connection. We will achieve this by harnessing the power of social tribes and in-person interactions. By social tribe, I mean any part of your identity, whether that be an interest, experience, or stage of life. Plenty of social tribes already exist online on apps like Facebook, Reddit, Discord. However, one thing they do not do well is permeate into the physical world. And that is where Little Atlas comes in. We started tackling this problem for the Web3 community and launched Degen Events just under 2 months ago. Degen Events is a platform that enables Web3 natives to discover in-person events and meet each other worldwide. Since launch, we have over 4,000 unique users and 100,000 page hits. Degen Events speaks to users because it enables them to meet with highly aligned people and build true connections. My co-founder and I have met multiple grateful people at events in London who discovered the event via Degen Events. We are already receiving validation that the intersection of social tribe and IRL is powerful. Through Degen Events, we discovered that people are more eager to connect with others in a shared tribe. In the Web3 world, these tribes often take the forms of NFTs, tokens, interest in a project, living in the same location. And in the next couple of months, we plan to prove this out even more as we scale Degen Events to more Web3 natives. Web3 is our wedge, and next year we will expand beyond Web3 tribes in order to become a global social app for finding local belonging. I'm happy to take any questions.
Wonderful. So panelists, I typically won't pop up at the end of a pitch. I just want to pop up to let you know this is a video call. Typically, we're going to talk over. Don't worry, it's better than dead air. So as soon as the pitch is over, feel free to jump right in with your questions. David, you're still muted, but let's do this.
Wonderful. Well, thank you so much, Victoria. It's great to meet you, and thank you for staying up so late in London time. Absolutely love this space. Love the idea of productizing community in meaningful ways. Wanted to confirm it sounds like the model is, if I'm understanding correctly, is direct to consumer with a plan to monetize the monetization of data. If that is indeed correct, would love to hear how you're thinking about data and that monetization and avoiding some of the pitfalls that have maybe caused some distrust among some existing social networks and users.
Yeah, thanks for the question. So yeah, in the short term on Degen Events, we'll probably monetize by charging in the event space for ticketing and maybe some like conference portals that help connect people better. But in the long term, like once we get a bigger network, we will be able to understand a lot of information about people and help them improve events. So we'll release a lot of data APIs that will help connect people better because we'll know, what they're interested in and what where they are situated around the world and like what their tribes are, so that we can upsell for experiences that might enhance in real life interaction. I think something that we won't follow from existing social apps is that in existing social apps the incentive was wrong, because due to the advertising model that it followed, a lot of influencer content started popping up. And I think that's something that remains very core, like not doing that and not making it any sort of broadcasting platform, but one of genuine true connection is something that we really want to focus on and avoid the heavy advertising space.
Thank you so much.
Victoria, I also have a question. So, it's great to see you tackling the event space. I think this is one area where, like, even in Web 2, no one's really cracked the code on this. I think one problem event aggregation platforms or social platforms have had in the past is, it's very hard to get comprehensive event data. And then also it tends to generate a lot of spam, right? There's just listings that aren't accurate or spammy, and so that really dilutes the experience. What's your strategy for getting lots of high quality events and keeping spammy listings off the platform?
Yeah, that's a good question. So initially, I think this is where the social tribes can be powerful, because if you go into an Eventbrite today, there are a lot of events and there's a lot of noise. And I think if we have a better understanding of what people actually care about and how they associate themselves, then we can show them events that are most relevant to them. And I think something that's also missing in ticketing today is this social aspect and curation within a crowd. Something we found in the Web3 community through plenty of interviews is that when someone hears an event, they want to find out, is it good? Are people I know going to this event? And so they'll start reaching out to their friends and their network to find out who's going to this event. I think if we bake in some of those features and show like, oh, these people are going to events, they have these shared interests, then we can better curate the events that should be shown and reduce some of the noise and the spam.
Great, thank you.
Nice. Very well said. Great job, Victoria. Thanks, panelists, for the great questions. We'll see you guys in just a few minutes. See you later, Victoria. Okay, cool. So up next, we're going to hear about CrossMint. So Alfonso, how's it going?
Good. How are you?
Fantastic. Where are you, by the way? Are you in the States? Where are you?
Yeah, I'm located in Miami.
Oh, in Miami. Nice. Party town. Let's see how the slides look. Perfect.
Awesome.
So we'll give you 2 minutes on the timer. Take it away.
Awesome. Thank you so much. Hello, everyone. I'm Alfonso. I've been a Googler through recently from 2015 to 17, and I'm here to present CrossMint. At CrossMint, we build infrastructure to bring NFTs mainstream. We believe that NFTs have taken already escape velocity and are going from pictures of monkeys to become the first universally agreed digital standard for digital ownership, but they're still pretty hard to use. So we launched 6 months ago, and so far in our first 6 months, we built a credit card checkout to buy NFTs. It's been growing really quickly. We have multiple, tens of millions of annual revenue, GMV, millions in annual revenue. We're growing over 100% month over month, in spite of the NFT market having chilled the last few months. And we're starting to roll out in NFT marketplaces now. So the gist of how the product looks like, if you try to buy an NFT without CrossMint, you have to go through like 15 steps, creating a wallet, passphrase, getting crypto from different exchanges, etc. If you use CrossMint, you can buy an NFT in a minute with credit card, email, and no wallet required. For sellers, it's also a really good value proposition. It's free for them, 10-minute integration, and 35% more sales with 10 minutes of work. We're a team of 20. We have experience not only at Google, also WhatsApp, Amazon, Meta, and many other companies. We have data pre-seed backed by early investors and builders for the companies below. And right now, we're raising a Series A. To be honest, when we signed up, we were starting around. We're a bit almost closing it now, but still open for like some strategic angels or other checks. So still open for those things. Thank you.
Great. Thank you, Alfonso. So, first of all, thank you for making this payment workflows for, the Web3 world very easy and seamless. It's one of the key steps for adoption. So thank you for working on this problem. Now, one of the biggest challenges you're going to face as you scale is going to be fraud and how you deal with it. So what's your plan for that? Because currently on your website, I see that you're taking on the chargeback risk on your own.
Yeah, that's a great question. So in general, right now for sellers, we make it a no-brainer. We take all the fraud. And so we have a fairly sophisticated system right now. We have the usual checks that people have before when someone tries to buy with credit card, like risk analysis from payment processors, as well as Sardine and things like that. But then the key thing that we have in our model is when someone purchases an NFT, we put the NFT in a custodial wallet that acts as a sort of escrow, which allows us to analyze when a user already purchased the NFT, but before they can take it out and monetize it. Let's say this is a scammer, buys with a stolen credit card and tries to take it out to sell it. We can run a second check and not allow them to export it unless we're fully confident that it's them. So that allows us to basically keep fraud at bay. We're currently at 0.3% chargeback rates, and we've had attacks pretty much since week 1 for the last 6 months.
Got it.
Hey, Alfonso, the 35% lift in conversion rates is really impressive. So I can see why these different sellers would want to adopt your technology. How do you think about the long-term durability of your model? Because it seems like the on-ramp is super strategic for all these big sellers, and as they scale, they'll want to potentially build this on their own and have their own native capabilities here.
Yeah, so actually it's pretty hard. Fraud, for example, as Prabhakar was mentioning, is like fairly complicated to build. I'd say a third of the team is building that. Other things that are hard to build on our model is integrating against. In order for our system to work, we had to build custodial wallets. We had to build minting infrastructure that knows how to mint 20 different kinds of smart contracts across chains. And think of it like a plaid for banks. It's not really easy to do. There's documentation around the standard, but not around all the multiple different implementations that people do of the standard. So it's pretty hard to do. And lastly, we're actually starting to build adjacent tools around the flow of that go beyond the event of purchasing NFTs, which also allow us to offer more tools for the different buyers and sellers.
Great.
Wonderful.
Thanks.
Wonderful. Thank you so much, everybody, for the great questions. And Alfonso, great answers. Very cool pitch, man. So panelists, we'll say goodbye to you for now. We'll see you in just another couple of minutes. And up next, we've got Nathaniel, and he's going to tell us about something called Vilcaso. How's it going, Nathaniel?
Quite well, John. How you doing?
Fantastic. I love the are those books or no, those are those VHS tapes?
They're actually, yeah, there's some VHSs up in the corner there, but books,
wow.
Movies, whole deal.
Very cool. Well, let's see the slides looking good. So I'll go ahead and put 2 minutes on the timer. I'll get out of your way. Take it away.
Cool. Hey everyone, my name is Nathan. I'm a co-founder and CEO of Vilcaso. And at Vilcaso, we're helping unlock America's home equity. Here's why that's a big deal. For 80% of middle-class Americans, their home is their largest financial asset. Now, the problem is that it's remarkably illiquid. So you might be thinking like, hey, don't we have home equity loans and HELOCs? And we do, but the issue is that they're really slow and really expensive. But guess what? People still use them to access over $200 billion a year in home equity. Now, that's a lot of money, but it actually pales in comparison to the equity that's being left on the table, which is $25 trillion. Now, if you're fast with math, you know that means less than 1% of home equity is being accessed today. So the opportunity here is not only to capture the 1% of the market that's being served by lousy products, but it's actually to address the 99% of the market that isn't being served at all. At Vilcaso, we've developed a way to get homeowners liquidity on their home equity in about 15 minutes with no excess fees and no monthly payments. Our product is driven by two major insights. First, crypto investors who are seeking to store value can benefit from the stability and inflation resistance of US real estate. And two, if you really want to unlock the 99% of this market, you need an origination process that's fully automated and self-service. At a high level, Vilcaso lets homeowners swap out a slice of their illiquid home equity in exchange for our fungible asset-backed utility token, which can then be swapped for cash inside DeFi. In short, homeowners receive the value of a percent of their home equity today in exchange for an obligation to repay the same percent of their home equity when they sell their home. We have a really awesome team of DeFi degens, engineers, legal and compliance expertise. I'll also call out that I previously co-founded the mortgage fintech Roostify, which now processes over $600 billion a year in loan volume. We're raising $3 million in safes at a $21 million post-money cap. Our allocation for staunch, I believe, is $300,000. Our full round will give us 18 months to runway, which will take us to a product launch and growth to $50 million in assets under management. Things are moving fast on our side, but we expect to keep the round open until August 19. Thank you.
Thank you, Nathan. It's very cool. Right. Thank you for working on a very practical use case and a problem. Now,
same one.
Yeah. So I want to know what's the core use case that you're working for here? Is it to unlock liquidity for these homes, or is it to allow users to speculate on your token? Because if it's the first, then why not give them USDC directly as opposed to your token itself?
Yep, we absolutely could. So to answer your question, yes, it's the first use case that we're focused on. We're trying to deliver liquidity for homeowners. And we absolutely could deliver USDC. And in fact, when we think about our parents or grandparents ultimately using this product, we will be delivering them directly cash. But the choice to deliver tokens at the outset is a choice that's made with respect to our beachhead market, it's crypto native millennial homeowners. This basically cuts down our MVP build out, and it simplifies our marketing message quite a bit.
Oh, got it.
Hey, Nathaniel, this is a great application of DeFi. It's a really cool value prop for homeowners. One question just around the regulatory environment and risk here. Consumer finance, especially mortgages, home equity lines, it's heavily regulated. DeFi is kind of the Wild West right now. How do you see that playing out in this space? I mean, have you had any, do you have any predictions of where the regulatory environment is going to go, or how you get ahead of that?
Well, I'd say the short answer is no. No one knows where the regulatory environment is ultimately going to go. We have both internal and external counsel. We debate this stuff all the time. Our regulatory approach is that we're thinking about doing a Reg D exemption. And so that basically allows us to go down a path that we know is safe. It's something that guys like Goldfinch and Centrifuge use. And even though we would love to officially be classified as not a security, the earliest that we're expecting any sort of regulation from the SEC in terms of defining what crypto assets actually constitute securities is going to be next year. We can't wait that long. So we're going the Reg D route.
Great, thanks.
Right on time. Man, that Q&A time flies by. Great job, Nathaniel. I'm sure you're going to have no problem closing out this round. Very, very nice. Thanks, panelists. See you in just a moment. Okay, cool. So we're moving right along here, right about the halfway mark. So up next, we're going to hear about A42. So here's Hiro. How you doing?
Hi, could you add a Hideyoshi too on
Yeah,
the stage?
let's bring you both up. There we go. And then there's the slides. So I'll get out of your way and start a 2-minute timer. All right, take it away.
Okay. We are building WCIO, the blockchain out hardware module for physical devices, and on top of it, we also built Vlock, a Web3 smart lock system. Let's say you're using Gmail at work, and if Gmail goes down, you're lucky because you don't have to work that day. But if you use a Google Smart Door Lock and suddenly Google stops, you cannot enter your home because you cannot unlock it. This is a huge problem, and we solve this with our product. So Vlock is a ready-to-use Web3 smart lock system based on WCIO, which allow people to open the door with their NFT. It checks if a user has a certain NFT, and if verified, it will allow them to unlock the door with no gas fees required. This is Vlock. But our core module is WCIO, which processes 3 steps. At first, users sign a message just like logging into OpenSea, and then it checks the smart contract state to verify if they are authorized to use devices. And if verified, it sends commands to the devices. The point is that this can be done in a decentralized manner because WCIO runs Ethereum node on top of itself. We have more applications based on WCIO. So it can be connected to any devices such as cars. It can be connected to the gates. It can be used as one of the NFT utilities to improve its in real life experiences. Or by using it, we can easily manage token gated spaces such as hotels, Web3 Airbnb, and Web3 WeWork in the real world. It can be connected to any IoT devices, so we can bring Web3 to the physical world. So currently, our team has 3 people right now and totally self-funded. And Ethereum Foundation gave us a grant for our product, and WCIO is patented in Japan and currently applying for international patent. So we are aiming to raise up to $5 million with SAFE to hire engineers, sales, and back office. Thank you very much. Okay, any question?
Hey, Hiro. So, you talked about Google, and other products going down often in the Web2 world. But if you look at what's happening in the Web3 world, Solana goes down quite often, which is one of the chains you're building on. Ethereum gets clocked quite often. So do you believe this is the right time in the market launching such a product? Or are you a few years ahead of time right now?
Hide, could you please answer that question?
What is your the question? Can you hear me?
Yes, I can. So
sorry.
With the blockchains at the moment getting clogged all the time or going down, do you believe that this is the right timing in the market for launching such a product? Because yes, Google does go down, but it's probably once in a year for like a few seconds, as opposed to the number of times ETH gets clogged.
Okay, yeah. Actually, it is depends on the blockchain. I know the Solana or the new the blockchain has down, but I think that Ethereum is more stable, and then our product is mainly using the Ethereum, and I think there's no such kind of the down on the Ethereum, and also our system has the blockchain on the device internally, so our system doesn't rely on infra or such as infra or this kind of the third-party nodes. So because our system has the blockchain database inside, I think this kind of the our system won't be affected this kind of the failure, and then I think the Ethereum is more stable, and so users can update the smart contract status.
Got it.
Hide, thank you so much for the presentation, and great to meet you both. I'm curious, fascinating use case here that you're going after. Would love to hear a bit about your plans for actual rollout. What do you think are the biggest barriers to user adoption, and what are some of your plans to mitigate some of those challenges?
So actually our biggest barrier is the regulations in the basically the radio wave regulations on the radio wave So now, we have already launched our development version of the smart locks in Japan, but the radio wave regulations are different between the countries. So we would like to support the smart lock devices, smart lock devices in US, because our system actually our system adds NFT unlocking features to the existing smart lock devices. So we actually we can support many smart lock devices, but we are now finding the smart lock devices in US which can be connected to our system. So this is our current barrier to go to US market right now.
Thank you both so much.
Very cool. The crowd loved it. Looks like you got a lot of meetings that are ready to be set up. So good job. Good job, guys. Thanks, panelists. We'll see you guys in just another moment. Next, we're going to hear from Sugam, and he's going to tell us about Top of Finance. Sugam, how you doing?
I'm great. How are you?
Fantastic. So why don't we pull up the slides? There we go. Let's get right to it. Dive on in.
Awesome. So DeFi had its Lehman Brothers scale event akin to the great financial crisis just a few months back. It was triggered by the implosion of one of the largest stablecoins. It resulted in $60 billion of market value just getting wiped out over just a few days. Unfortunately, many investors lost a lot of money, but something remarkable really happened. Without any government intervention or any human being, actually, virtually every major DeFi protocol adjusted to the market meltdown as designed. No bailouts, no quantitative easing. And through this tragic event, we learned how robust the DeFi ecosystem really is. And with its breakneck speed of innovation, we believe that the future of our financial system will be on-chain. But for this to happen, we need institutional adoption to grow and stabilize these markets. Our mission at Top of Finance is to make it easier for managed funds to participate in DeFi. And when we talk to these funds, they tell us how excited they are about the emergence of this new of decentralized finance. But they also tell us how difficult it is to operate in a space with such limited tooling. They need highly accurate risk management and portfolio monitoring capabilities. These are basically table stakes at this point for any traditional finance fund. You can't operate a fund without them. I mean, take this quote from one of our customers that illustrates the pain point so clearly. When you take digital money and you put it all over the internet, it's really hard to know what's actually happening. Our solution starts with the root of the problem, data. We're making on-chain data as easy to access as a Bloomberg terminal. Our initial product is a blockchain data indexer. It'll be available as a subscription service where customers get an API that streams real-time decentralized exchange data directly into their internal systems. It works across chains and supports multiple DeFi protocols. We have a working MVP that's being piloted by our early customers, and they've already expressed interest in subscribing to the product when it's ready. But that's just the beginning. We don't see ourselves as a data company. We have a big vision to build a series of products that make participating in DeFi way easier for funds. For example, we've seen a lot of demand during this bear market for tools to manage market neutral strategies. I'm Sugam. I'm the founder and CEO of Top of Finance. I previously co-founded and led product development at Sidecar, which many of you might know and run your deals through in this community. I've also worked for a number of top Silicon Valley companies in early stage product development and go-to-market roles. I've also built an incredible founding team here that has experience in large-scale data platforms and financial trading systems. To date, we haven't taken any money, but we're planning on raising a round later this year. And we have an allocation available for the Xoogler community. We're specifically looking for strategic investors that help us gain access to potential customers like hedge funds and asset managers. And anyone that has relationships with top-tier Web3 VCs or is just passionate about bringing institutional money into DeFi, we'd love to talk to you. Anyways, that's the end of my presentation. I think I'm standing at the end here, so let's open it up for questions.
This is really interesting, and I can see there could be demand for this. In terms of indexing all this data, I assume it's really important for these managed funds to have real-time access to data, right? Very comprehensive data. Can you talk a little bit more detail about what makes your indexing technology or infrastructure special in this regard?
So I think two things. One is a focus on sort of low latency in real time. So really thinking about how do we get the data quickly? So like, there's some technicalities here, but you're probably familiar with the fact that like, at what point is the data sort of appear on the chain? So there's times before it's confirmed, there's times once it gets confirmed, and it's sort of there's a consensus algorithm. So I think we think a lot about sort of like, how can we get the data as quickly as possible? Today, we only get data from confirmed blocks, but we're thinking a lot about getting data from unconfirmed, like mempool transactions. So that's kind of where we want to go next. So that's one. I think the other is we're really thinking about the value we bring as being multi-protocol. So basically one API to support data from any single DeFi protocol. And I think a lot of times what you'll see, especially in bull markets, is a lot of the alpha is in these newer sort of untested protocols. So I think for us, the idea, we're really focusing on internal development tools that make it easier for us to quickly start sort of getting data from the newest protocols that haven't been around very long. So those are the two things.
Great, thanks.
Hey, Sugam, could you share how your platform helps traders manage risk?
Yeah, so today we are primarily a data platform, right? So what we're doing is the way we help manage risk is that we give them data sort of like you said before, in a lower latency fashion, so they have more, I guess, fresher data. That the challenge we saw when working with our initial customers is that the tools that we're using, we're giving them different data, the different tools that they've used, like DBank or Zerion, Zapper, and so we've done some POCs where we've demonstrated that we can our data is far more fresh and more accurate than that. And so ultimately, it's a question of like data freshness. And in a volatile market, that is really critical to sort of understanding the risk exposure you have in your portfolio.
Understood.
Fantastic. Sugam, they love you. They really love you on Stonks. A lot of really interested people, some great questions in the chat, and looks like there's a lot of meetings waiting to be had for you as well. So good job.
Thank you.
Thanks, panelists. See you again in just a moment. And Sugam, thanks again, man. Great job. Okay, cool. So up next, we're going to talk to Kish, and he's going to tell us a little bit about Sapling. Kish, how you doing?
Doing great, John. How are you doing?
I saw you, I saw you a few months ago on Stonks, correct?
That's correct.
Awesome. You did a great job then, and I know you'll do a great job again. Tell us about Sapling. Take it away.
Thank you. The metaverse. Metaverse is the frontier for self-expression and storytelling. Brands are eager to leverage metaverse to tell their story, but they face a lot of challenges, from lack of ROI measurements to too many platforms, poor quality content, huge upfront investments. You have to buy land, mint NFTs, experimental budget, and a lot of scams and ghost towns. We started Sapling to solve all of those problems. Saplings is the AdWords for the metaverse. It's a 360-degree metaverse marketing platform where brands can auction, launch, and measure their metaverse campaigns. Our go-to-market is to host music concerts in the metaverse and monetize them through all these four things. There's an embedded video here, I think, which you can check on the page below. It's not playing, but that's fine. The part that I'm most excited about is to work on this project with these amazing humans. Collectively, we have 15 years of ML AI experience, 30 years of experience in gaming, 25 years of experience working at startups. We have worked at YouTube Music, Warner Music, Apple, Activision, Google AI, and Microsoft. We have 43 brands who are eager to try the product out. We have 10 partners who we actively across the demand side and 3 metaverse campaigns. We have a long list of investors. 4 of them are here. Balaji is on the cap table. He's the ex-CTO for Coinbase. Xoogler Syndicate is an investor with Chris Fong as LP, and Shiva and Raghu from OpenSea and Falconex are investors. We want to reward our early investors today. So the first 20 investors to commit will get an NFT and access to our concerts. You can find more details about that by scanning this QR code or visiting sapling.gg/Xoogler to complete that process and be eligible for that. Thank you.
Hi, Kish. Thank you so much. Fantastic to meet you. And the framework here is one of, as Xoogler's, we're all familiar with for sure. Fascinating application here. paint for us that moonshot picture of what does the landscape of advertising look like 10 years from now, and what's your role in it?
Yeah, I think the video did not load, so if anybody scrolls down there, it actually shows that to you visually. But the idea is, frankly, ads suck right now, right? In the last 15 years, they always have. Like, this is a great YouTube video, a YouTube ad, said no one ever. But the thing is, in a 3D environment, they don't have to. We love advertising, but we think advertising takes away from you as an experience. So what we have built, for example, we have built NPC marketing, where NPCs are wearing Adidas clothes and they're walking around the metaverse and interacting with you. There's no reason advertising really has to suck, right? So there's so much you can do in a 3D environment where people can move around, and the user has the choice to go and interact. I really wish I could pull up that video because that gives you a visual vision of that. But yeah, I hope my words filled in the void.
Hi, Kish. Yeah, this is really exciting, and AdWords was the first product I worked on in 2003 when I joined Google. But advertising certainly come a long way digitally. When you look at all the different metaverses out there, is your idea to be sort of the conduit where a brand can come to you and you can represent them across all the major places where they want to interact with an audience?
Yeah, we would love to do that. But the reality, David, is that if you talk to brand advertisers, and if you look at what's happening with them, nobody's actually delivering value, right? Some of the crypto ones, and I'm not going to take names, right, have zero audience, right? They've promised a lot of things. And if you go and build on them, like I've been working on 2 of them this week and I'm pulling my hair as a developer. It's so hard to get anything done. And it makes sense, right? People are trying to start these decentralized economies and like do a lot with the metaverse. I think what we are saying is like, let's do events. Let's do music concerts. Like we're negotiating with like a music company right now. So we're like finalizing the deal. We're very, very focused on let's do concerts and have brands part of that. So to answer your question, I would love to work with Roblox. I would love to work with Sandbox. I would love to work with Decentraland. But the truth of the matter is Roblox is the only platform which has realistic audience, but then advertisers don't want to like target kids. So it's like this weird mix of like, there's nobody targeting adults, right? And these are ghost towns. So I would love to work with everybody else. I would love to be just the marketplace and not be the supply. But the reality is nobody's really picking up and building UGC tools to do so.
Great, thanks.
Wonderful job, Kish. You crushed it. They loved it. And everybody can scroll down the page and play his video. It's really good. Cool. So goodbye, Kish. We'll see you next time. And goodbye to the panelists for now. We've got just a couple more left. We're almost over with this wonderful event. Up next is Yuri, and Yuri's going to talk to us about Wallchain. Yuri, I can't wait to hear about it.
Hi, everyone.
Hey, Yuri. So let's take a look at the slides. Cool. So
yeah, let's
you'll
go.
be able to control them with your arrow keys if you want to, or if it's just one, even better.
Yeah, it's only one slide.
Perfect. So I'll put 2 minutes on the timer. Take it away.
Cool. Let's go. Hi, everyone. I'm Yuri, and we are Wallchain. At Wallchain, we help crypto exchanges get extra revenue from arbitrage and protect their users from bots. So far, we processed more than $1 billion transaction volume for our clients, growing 83% month over month. Imagine you are swapping $10,000 of Ethereum, you go to some of the decentralized exchanges like Uniswap, QuickSwap, or so on, and boom, $200 of that go to some random bot. And it all happens on scale. More than 50% of transactions on decentralized exchanges are made by bots. This is a huge problem, and we have a solution for that. Our solutions consist of API, where we calculate various predictive backrunning strategies, and Wallchain protocol, where we execute the strategies and capture arbitrage. By eliminating these bots, we bring extra 15% to decentralized exchanges. Our public integrations include ApeSwap and the Fin network. We have 6 more upcoming integrations, which we are going to announce soon. We are backed by Y Combinator alumni crypto fund OrangeDAO. Our team has a Y Combinator alum, me and my co-founder, PhD in machine learning. We have backgrounds coming from Google, Meta, Grammarly, and Y Combinator. And currently, we are the #1 bots protection solution on Binance Smart Chain and on Polygon Chain. And if you're interested in creating a healthier and safer environment in Web3, click the Get Intro button, and I'll be happy to tell you more. Thank you.
Hey, Yuri, this is great. It's great to see somebody tackling this problem. I know bots are a big problem with the decentralized exchanges. Also for Twitter, maybe you could help Twitter too with their bot problem. But
Yeah.
one serious question: can you talk a little bit more about the business model for you? Are you taking basically a small percentage of each transaction? Are you taking a percentage of the upside?
Yeah, great question. We take 20% of what we capture. So it's like we capture arbitrage, we keep 20% for us, and we give 80% back to the exchange, and exchange decides what to do with this 80%. Some of them decide to give like half of that as a reward to users, like a cash back on exchange, 40% as a cashback to the user, 40% to the DEX treasury, and 20% we keep for us.
Great, thanks.
Got it, Yuri. Very helpful and really cool presentation. Just to tag on to David's question, how much do you save per transaction in bits or pips?
How much do we save per transaction? Save, you mean?
On average. Like, is it a bip, half a bip overall on your gross volume? How much do you save?
So firstly, not every transaction is profitable. Yes. There's like a small percentage of transactions that are profitable, and some of them, like, what do you mean save on transaction?
So with your arbitrage bots, from a DEX's perspective, you're giving them some money back, right? So is that half a bip? Is it 1 bip? Is it 5 bips? How much does it
so we increase their revenue by 15%. We increase our decentralized exchange revenue by 15%.
Okay, that's really cool. Good job, Yuri. And you take 20% of that as your revenue.
Yeah, like 15% is like 40% of the overall arbitrage that we capture. And like 40% to user and 20% for us.
Understood. Very cool.
So we have like 7.5% of the arbitrage revenue when we partner with someone.
Got it. It's really cool stuff.
Very nice, Yuri. Very, very cool. Great job with the pitch. They loved it. And I think the panelists liked it too, which is always fun. Cool. So panelists, we'll see you guys in just another couple minutes. Two left, I think. Oh, three left. Yuri, that was killer, man. Okay, cool. Up next, we have George to tell us about Chainfuse. George, how's it going?
Good. How you doing?
Awesome. Kick-ass chair you got there. I like that. The slides are looking good. So you know how it works. You've got 2 minutes on the timer. Take it away.
Okay, you got it. Hello, everyone. My name is George Bertillo, and I'm a technical co-founder and CEO at Chainfuse. Next slide. Web3 technology is expensive, extremely technical, and inaccessible for businesses. So Chainfuse provides an easy-to-use platform that makes it simple for businesses to get started with Web3 in just a few clicks. It provides templates, embeddable widgets, and an API to simplify the implementation of Web3 technology. Think of Chainfuse as the Shopify for interconnected crypto microeconomies. Their service is free to use with ads, and we take a micro fee when you have a sale. There is no code required, but you can also embed all of our components on your site using Chainfuse NPM package. With Chainfuse, you can also deploy a do-it-yourself utility token template using the platform, which you can also white label by mapping your domain to it, all from within Chainfuse. We are planning to launch our own token drop template beta in mid-August 2022 and our NFT marketplace template beta in October 2022. We will fundraise using our own technology. We believe that NFT fundraising is much more frictionless and effective and transparent. Additionally, we continue to build partnerships with crypto wallets and NFT businesses. And think about this. There is so much cool technology out there. You have Infura, you have Moralis, you have Alchemy, you have so many other ones that you use for managing blockchain communication. Then you have IPFS. Then you have Pinata, Arweave for permanent storage, and so many more. At Chainfuse, we believe that these businesses are a piece of a larger puzzle, and we want to help solve that puzzle. We want everyone to be part of the revolutionary capabilities of decentralized systems, and Chainfuse will become the go-to place to deploy your multi-chain, multi-wallet, multi-cloud, multi-token, ready-to-use experiences. This is what must be done to accomplish our mission, which is to make blockchain useful and accessible for all. And if you're a business and you're interested in dropping your NFT utility token, we're here to help. And if you have any cool templates that you think would bring a lot of impact into the crypto world, we would love to collaborate with you to make your tech accessible for everyone as well. Thank you. And these are actually some screenshots of our platform.
Thank you for the presentation, George. Really cool stuff. Now, quick question for you. Since you're launching on Solana as well, how are you guys different from Metaplex, which is run by the Solana Foundation, is offered for free, they have no charges, and similarly, other blockchains are planning to launch the Metaplex equivalent as well, which is free of charge.
Yeah, so I haven't really heard of Metaplex, but we are going to be supporting EVMs first. Then we're going to be expanding onto Solana, and that's when we're actually going to be a lot more knowledgeable with, like, multi-chain, right? Like, we started with EVMs, we started doing research with Hedera Hashgraph, we started doing research with Aptos. I think that those are also like really interesting enterprise-grade blockchains that I think might be really good fits for an API that is used by enterprise products.
Got it. Just a quick advice would be to focus on chains that actually have current NFT adoption, so that you're not trying to basically wait for them to grow the adoption. But
got it.
Understand.
Thank you.
George, thank you for the presentation. Absolutely love the North Star vision for the company. As you prepare for launch, would love to hear a bit more about who your target beachhead market is, and what kind of early validation feedback are you getting now pre-launch?
Yeah, so our target market right now, we're targeting game developers, filmmakers, and digital artists, so creatives in general, people that want to create their content and NFTify it so that people can verifiably say that, hey, I own your stuff, right? But also, additionally from that, right, I think that NFTs are not just art, they're not just music. Imagine a world in which NFTs could be like your home NFT, right? Like your home is actually represented as a title, right? As an NFT. Maybe your birth certificate. Like, we're not far from that future. I think that NFTs will eventually bleed into every single part of the world, and we want Chainfuse to be a tool to help achieve that future.
Whew. Fantastic. George, they loved it. I sound like a broken record. The chat's blowing up. The total the investment interest is coming in. So they want to talk to you. They want to learn more. So good job.
Appreciate it. Thank you so much. Bye-bye.
Thanks, panelists. We'll see you guys in just another couple of minutes. So up next, we're going to learn about something called Esoba DeFi. We love the DeFi. Everybody loves the DeFi. So let's hear it from Shingy. Shingy, how you doing?
Doing well. How's everybody doing?
Good. So are you outside right now? Where are you?
Yeah.
So bright.
I'm in my backyard. Yeah.
Are you in California?
Yes, San Rafael.
Nice. Fantastic. Let's check out that's not you. I don't see your slide down there. Did you already share a slide for Esoba?
I emailed it.
Okay. Can you pitch without it?
Yeah, that's fine.
I don't have it. Okay, run it. It's just going to be a close up of you, and it's on the page, so anybody looking for it can find it on the page.
Yeah. Cool.
Take it away.
All right. Hi everybody. My name is Shingy. I'm the founder of Esoba DeFi, and we're financing solar projects across Southern Africa using NFTs on the Flow blockchain. In the future, we'll move multi-chain onto EVMs, but for now, part of the reason why we're on Flow in particular is because they're an active investor in us. To the problem that we're targeting across Southern Africa is a couple of things. One is the severe power outages that are faced by businesses. More than 75% of businesses in the area deal with regular power outages. And that leads us up to roughly about a 10 gigawatt shortage in terms of overall capacity. The other issue is a financing issue, where governments are unable to raise the financing themselves due to a myriad of reasons. And the lack of liquidity and lack of Forex mean that local developers face a very difficult time to raise the 10% of equity that project sponsors are expected to bring to the table, to bring the LPs and to bring the debt financing on board. So as a result, more than half of all licensed renewables projects end up either stalling or canceled because of this lack of financing. So the solution that we're bringing to the table is targeting a $20 to $25 billion opportunity with the 10 gigawatt shortage just in Southern Africa alone. By raising NFTs, we're able to rapidly finance the 10% for the project sizes that we target, which are anywhere from 1 megawatt to 15 megawatts. This allows us to guarantee a pro-rata share of cash flows from the power purchase agreements that we sign that we can then return to project investors. So we essentially have an actual asset-backed NFT that we're selling as an investment vehicle that also drives capital to address a pretty severe issue from a climate change as well as an economic development perspective. From a team perspective, we have a very strong team. Myself, I work with 11-figure asset managers across the United States to solarize everything that works. I do the solar economics. We have a former ambassador on our team who is helping us navigate the complex web of government relationships. We have a tokenomics expert, as well as a project engineering expert with over 50 megawatts worth of installation across the continent. So armed with this rapid ability to raise for projects, we are able to compete and outperform the myriad of developers who are able to win projects due to nepotism or whatever, but are unable to actually execute on what they've essentially falsely promised to governments. This allows us to then take a strong competitive position across this $20 to $25 billion market of developing renewables across Southern Africa. So we're currently raising a 250K convertible note. We're interested in speaking to those that are interested in both attacking this severe problem, but also playing a crucial role in addressing the impacts of climate change.
Fascinating use case, Shingi. Like really, really cool stuff. Since you guys are promising, cash flows in the future from, your NFT itself, you'll get classified most likely as a security. So how do you plan to just overcome that regulatory challenge?
Yeah, I mean, there are a couple of routes. One is that we base our operations outside of the United States, actually in Botswana. And so from a legal perspective, and we can talk, sort of more offline in detail in terms of how we're structuring that. But there are ways that we're circumventing so that we are domiciled in areas that are much more friendly to that kind of investment and don't seek to extract the way SEC is seeking to extract here in the United States.
Got it. The challenge you'll run into is probably just getting listed on NFT marketplaces because they're all domiciled in the US. So think about that in the future.
Yeah.
Shingi, great to meet you. Thank you for the presentation. I have a specific question about the fundraise and how you're thinking about it. You mentioned a 250K raise. With your vision, strikes me that you could raise from various types of investors, ranging from fintech to climate tech to those interested in, blockchain generally.
Yep.
250K, tell us where that gets you from a milestone perspective, and how do you plan to finance, generally this is a capital intensive endeavor.
Yeah, so the actual project financing itself, so this is somewhat confusing because this raises for operating capital for the actual holdco that actually runs essentially the marketing, the sales, the business development. And so that 250K is essentially deployed to building out the team on the ground that we already have. Because the business on the ground requires a lot of in-person, face-to-face. This is not something we can do over Zoom. So that's where that's going. From a project perspective, the project financing, so alongside the NFTs, we're combining this with institutional capital from private equity LPs as well as debt financing. So infrastructure banks, et cetera, to actually provide the financial muscle for these projects.
Got it. Thank you so much.
Fantastic. Great job, Shingi. Lots of interest on here. A lot of people. Whoa. I just looked again. It keeps going up. Great job. And panelists, we'll see y'all just one more time after we have one more pitch. Okay. Let's see. So up finally to bring us home is last but absolutely not least. We're going to hear about DAppOS. There's Isabella. There's Ty. How you guys doing?
Hi, thank you, John, for having me.
Thing we got going on here. Sorry, so I didn't mean to interrupt, but look at this. Look how weird we look. Okay, there we go. That's better.
Cool.
All right, you ready to do this?
Where's our slide?
It's right here.
Oh, awesome.
You ready for this?
Yeah.
Cool. 2 minutes on the timer. Take it away.
Thank you, John, for having me. Hi, everybody. This is Isabella. Really excited to be here and talk about DAppOS, an operating protocol for DApps. The problem we are solving is the difficulty in using Web3 products because of the confusing account logic and complicated workflows. The majority of Web3 users now are very tech-heavy who contribute to the current crypto infrastructure. However, if we want more people to use what we build, we have to lower the barrier for them to come. For example, in Web3, if I'm a user on one chain and I want to use an DApp on another chain, I have to do like over 10 steps, learning 4 or 5 products and click for 60 times. But if I just want to use TikTok, I open it, swatch, and swipe for the rest of my day. Now you know why there are only millions of users in Web3, while TikTok has 1 billion monthly active users. What we really want to do here is to bring the next billion users to Web3. Our solution is to provide an operating protocol to manage crypto infra for users. Similar to Android, you can use apps without touching CPU or GPU or any of this stuff. With our product, you can use the apps without learning tech concepts in crypto infra. We make current the app chain agnostic and simplify workflows from M to 1 for you. Up till now, we have already onboarded over 50 partners, including ACH and Perpetual, won 4 grants from top chains such as Polygon. My co-founder, TY, is a serial entrepreneur who has 2 successful exits prior to this project. I am a software engineer at Google and a general partner at an investment group. We believe technology should have good user experiences to use, and technology could make it happen for us. Thank you.
Thank you so much, Isabella, TY. Great to meet you both and love your backgrounds. Would love to hear a bit more about the team and with this fundraise, your priorities in terms of who you're going to build out and grow team-wise.
Yeah, so there are currently 4 core members on our team. One is TY. He's the co-founder and he's a former CTO of Alchemy Pay. And another co-founder is me, Isabella. I'm a software engineer at Google. And the third is David. So he is a former CTO at Fragma Metaverse, and he's also a business advisor at the Blockchain Global. He will be mainly focusing on building the community for us. And the last but not least, we have advisor Sean. He is the founder of Alchemy Pay, and he will be advising us along the way. Yeah, and so this round we are raising 2 million at a 30 million post valuation, and we already have 1 million committed. So and we are also open to strategic investors this time.
Hi, Isabella and TY. Can you talk a little bit more about how you plan to recruit developers to start building on this OS? Like, what's your initial target developer, and what types of use cases do you want to start with?
Yeah, thank you, David. Great question. I intentionally didn't mention the pitch because I think one of you would ask, so I can use this time to answer. So we will have, obviously, we will have a very broad use application scenarios. But to start with, we will first focus on the DeFi and NFT and the GameFi. So for example, in DeFi, with our product, we can bring CeFi user experiences to DeFi products. For example, users from any chain now can use Perpetual or any app on other chains. For NFT, we make it possible for users from any chain to trade NFT listed on OpenSea. And for GameFi, we can even make users without any crypto wallet to play the game.
Great, thank you.
Well, Isabella, I know that you had a very limited amount left in the round. We were sort of talking about it right before the pitch. It blew up. It absolutely blew up on Stonks. So good luck getting through all of these meetings with all these wonderful investors. I think that you'll make a lot of new friends here. So good job. Very good job.
Yeah, really appreciate the chance. Nice meeting you all. Bye.
Absolutely. Okay, cool. So let's bring up Chris and let's talk about wrapping this thing up. Chris, how's it going? What'd you think?
Thank you so much, John, and thank you to our panelists and all the investors who showed up today. I think we went up to 380 of you showing up live, and know many people who are RSVP'd also in Europe. It's the middle of the night there as well, so many people who watched the recording. So we're sort of doing this backwards, but I do want to, first of all, thank all our panelists, investors for asking such great questions and joining us today, but also perhaps ask all of you to do a quick intro so people who are also the attendees, who are angel investors, would know what to send you and how to reach out. So probably, we don't mind, I'll start with you and then we'll go to Mary and then David. What kind of startup investments do you look at, and how can these investors in the crowd send you some of their startups to you?
Sure thing. I'll do a quick brief intro. So I'm Prabhakar. I co-founded FalconX about 4 years ago. prior to that, as an investor at Axel, looking at enterprise SaaS as well as fintech investments. So if you're running a startup in the Web3 space, specifically in the metaverse or gaming sector, very interested to hear from you. If you're building anything in AI or robotics, very interested in hearing from you, which has nothing to do with crypto. And if you're working in anything in the healthcare sector, especially in stem cell research or therapy, please should, just looking at all these sectors.
Thank you so much, Prab. Mary, please introduce yourself as well, please.
Thank you, Chris. Yes, I'm Mary Grove. I'm general partner at Bread and Butter Ventures, based in Minneapolis, Minnesota. Invest with a pretty laser focus in 3 areas: enterprise SaaS, digital health, and food tech. And across that, look at AI, data, automation, really the software, tech-enabled hardware side of that. And so invest specifically at the seed stage. We're in our 3rd fund with 57 companies now in the portfolio, and love working with the Xoogler community. Best way to reach me is Mary at breadandbutterventures.com. And also on our website, breadandbutterventures.com, we do have weekly office hours with every member of our team as well, which you can book there.
Thank you, Mary. And David.
Hi, everyone. I'm David Thacker. I'm a general partner at Greylock, and I invest across a number of different areas: crypto, fintech, future of work, marketplaces, and mostly invest in early stage seed and Series A. So feel free to send me anything that you think is interesting. You can reach me at my email address, which is just dthacker@greylock.com.
Great. And again, we wanted to put the attention on all the Xoogler founders who presented. So we did this introduction last. We did not forget this. We do want to make sure all the amazing founders was able to pitch to all of you investors and crowd. I see a lot of you have already made contact. Before we wrap it up, Mary, David, Prab, any other final words or comments?
Thank you for organizing such a cool event, Chris. All the panelists, thank you so much for asking great questions. And all the founders did a fantastic job with the presentations today. So thank you, everyone.
This is a phenomenal community, and thank you, Chris, for your leadership in bringing us all together all around the world.
Yeah, thank you, Chris. It's great to see so many really exciting companies, and a lot of these companies have a lot of traction right now, which is really impressive at such an early stage.
Thank you, everyone. Thank you for giving up your time to contribute to this community. Everyone who works on the Xoogler community, it's all volunteers. So we wouldn't be a strong community without all of you giving up your time. Feel free to reach out to me, Chris at Xoogler.co, if you want to have any suggestions or comments about other companies any investors want to see or how to improve this event. And again, thank you to the Stonks team, Ali, John, Jesse, Courtney, everyone behind the scenes. I know there's plenty of you who have helped to make this event, but also the recordings, everything a success. 3 of you for asking such great questions, the investors in the crowd, but also the startup founders. Thank you for giving us the opportunity to work with you. We're here for you. We'll continue to partner with all of you, and we'll make sure to be as useful as possible for the Xoogler community here is for all of you. So Kushagra, I know you can't join, but thank you for all your help making sure this is a successful event. And everyone, the Xoogler Demo Day for APAC founders is in September. So we shall see you all very shortly. Thank you, everyone, for joining today.